What if the most important blockchain launch of 2025 is not Ethereum? What if it is not Solana, not Avalanche, not even one of the big names that dominate headlines? What if the real story is a new network designed to reimagine how finance, gaming, and digital identity connect in a single architecture? That blockchain is Somnia. And after this video, you will never look at mainnet launches the same way again. Let us set the stage. We are in 2025. Bitcoin ETFs and Ethereum ETFs are now normalized. Institutions are not just allocating to Bitcoin and Ethereum as speculative hedges. They are exploring altcoins as infrastructure bets. The Federal Reserve is cutting rates. The European Central Bank is easing. Liquidity is returning after 2 years of tightening. And capital is flowing back into risk assets. But here is where it gets interesting. Unlike 2021, this wave is not about hype. It is about infrastructure. It is about blockchains that can support real-world use cases and scale to millions of users. It is about projects that can bridge gaming, finance, and social systems without collapsing under pressure. And this is exactly where Somnia enters. Somnia is a new Layer 1 blockchain. Its mainnet launch in 2025 marks one of the most ambitious attempts to build what some call the infinite metaverse. But do not mistake this for marketing hype. At its core, Somnia is attempting to solve a structural problem that Ethereum and Solana have not fully addressed. That problem is interoperability across virtual economies. Today, if you build a game on Ethereum, you are limited by the Ethereum virtual machine. If you build on Solana, you are limited by Solana's programming models. Assets cannot move seamlessly. Identity cannot carry over. Liquidity fragments. And developers must choose ecosystems instead of building across them. Somnia proposes a different path. It is building a framework where developers can create metaverses, connect them, and let assets flow freely across experiences. In other words, Somnia is not just another chain. It is attempting to become the operating system of digital worlds. But here is the twist. The market may have missed one key detail. This vision is not just about gaming. It is also about financial infrastructure. Because once you create portable identity and transferable assets, you create the foundation for decentralized economies that mirror real-world markets. And that is where institutional adoption becomes possible. Let us break this down further by placing it inside the 2025 macro landscape. Liquidity is returning. Global regulators are cautiously allowing tokenized assets to expand. Real-world assets on-chain are growing into a trillion-dollar sector. Corporate treasuries are no longer ignoring blockchain. And Ethereum 2025 sits at the center of this movement, acting as the settlement layer for tokenized treasuries, real estate, and equities. But Ethereum has limitations. Gas fees spike under load. Finality times, while improved with rollups, are still not comparable to Web 2 systems. Institutions want faster, cheaper, and more flexible infrastructure. That is why capital is flowing into alternative Layer 1 and specialized Layer 2. Now enter Somnia. It is positioning itself as a new type of infrastructure, not just to host DeFi apps or NFT marketplaces, but to create entire connected economies. And the timing could not be better. Because in 2025, we are not just rotating between altcoins. We are rotating between narratives, from speculation into adoption, from isolated ecosystems into interoperable frameworks, from hype-driven projects into real-world infrastructure. And here is the detail many investors overlook. The same demand that pushed billions into the Ethereum ETF is now spilling into infrastructure bets that can extend Ethereum's reach. That spillover capital needs scalable execution layers. And Somnia is one of the few projects positioning itself to capture that flow. Now let us zoom in on the Somnia architecture. Somnia introduces a dual-layer system. The base layer handles consensus and settlement. The upper layer, called the Somnia protocol, allows developers to build interoperable metaverses that can share assets, liquidity, and identity. Think of it as Ethereum plus middleware, designed specifically for virtual economies. It uses a proof-of-stake model, but optimized for high throughput and low latency. The design is heavily focused on scalability. Somnia claims its architecture can handle thousands of transactions per second without breaking composability. But here is where it gets interesting. The token, SOMI, is not just a gas token. It is also the key to identity. Holding SOMI allows users to create persistent avatars and carry reputation across different experiences. This is a major departure from most Layer 1 tokenomics. Ethereum relies on ETH primarily for gas and staking. Solana relies on SOL for fees and validator security. But Somnia is adding a third dimension, identity. This means the SOMI token sits at the intersection of utility, security, and reputation. And that combination could change the way value accrues in the network. Let us talk about tokenomics in more detail. The SOMI token serves 4 primary functions: staking to secure the network, paying transaction fees, governance participation through protocol votes, and identity creation within the Somnia Metaverse framework. At launch, a portion of the supply is allocated to validators and early contributors. A significant pool is reserved for ecosystem development, including grants and incentives for game studios. Another share goes to community programs, ensuring that not just VCs, but actual users hold tokens. But here is the twist. Somnia introduces an identity staking mechanism. This means that instead of staking tokens just to earn yield, users can stake SOMI to strengthen their identity, reputation, and influence across the network. In other words, tokenomics are tied not just to financial incentives, but to social capital. And if that works, it could create a feedback loop where the most reputable players also become the most influential stakeholders. This is something that Ethereum 2025 has hinted at with soul-bound tokens and reputation layers, but Somnia is embedding it directly into its design. If you value deep research like this, subscribe to Crypto Wayfarer. Now let us ask the hard questions. What are the risks? First, concentration. Early allocations still favor insiders. Even if community pools exist, the top validators and early investors may end up with significant control. Second, scalability is not proven at scale. Somnia claims high throughput, but no mainnet has ever faced real stress until usage explodes. Ethereum only revealed its true congestion issues in 2017 with CryptoKitties. Solana revealed its downtime problems during NFT mania. Somnia will face its own stress test once adoption rises. Third, narrative risk. The metaverse hype of 2021 has largely cooled. Meta has pulled back. Most retail investors no longer chase VR worlds. So Somnia must prove that this is not just a metaverse play. It must prove it is core infrastructure for gaming, finance, and beyond. And that requires more than marketing. It requires adoption. But here is the twist. Adoption may come faster than expected, because gaming studios are already experimenting with tokenized economies. Financial institutions are already exploring tokenized assets, and younger demographics are already comfortable carrying identity across platforms. Somnia could capture all three trends simultaneously. So let us frame the bull and bear cases. The bear case is simple. Somnia becomes another niche chain with ambitious promises but limited adoption. Competition from Solana, Avalanche, Aptos, and Ethereum crowds it out. SOMI remains a speculative token with identity features that never scale. The bull case is more powerful. Somnia becomes the backbone for interoperable virtual economies. It scales to millions of users across gaming, finance, and identity. Its tokenomics tie reputation and capital into one system. Institutions exploring tokenized assets realize that Somnia offers a framework beyond Ethereum rollups. And SOMI becomes a core asset of the next cycle. Which side plays out depends on execution. But here's the market detail many have missed. Somnia is not trying to replace Ethereum. It is trying to complement it. It integrates with Ethereum for liquidity. It allows Ethereum-based assets to flow into Somnia-based worlds. And it positions itself as a parallel infrastructure layer, not a competitor, but a connector. That is why this launch matters. Now let us talk about roadmap and expansion. Somnia's mainnet launch in 2025 is just the first step. The team has outlined 3 major milestones for the next 2 years. Phase 1 is ecosystem bootstrapping. This includes grants to game developers, onboarding of NFT projects, and integration with DeFi protocols. Phase 2 is identity scaling. This is when reputation staking becomes fully live and users can carry influence across worlds. Phase 3 is institutional adoption. This involves connecting tokenized real-world assets into Somnia-based metaverses. Imagine a game economy where stablecoins are directly backed by tokenized US treasuries. Imagine a digital identity that also verifies compliance for institutional investors. This is where Ethereum 2025 and Somnia intersect. Ethereum remains the settlement layer. Somnia becomes the experiential layer. Together, they could create a new form of blockchain infrastructure, one that supports both finance and culture. Now here is the twist. If this roadmap succeeds, SOMI is not just a token. It is a claim on identity, liquidity, and reputation in a network that spans multiple industries. And that is something investors cannot ignore. Community and governance also play a critical role. Somnia has launched its DAO structure. Token holders will vote on treasury allocations, validator incentives, and protocol upgrades. The DAO will also control how ecosystem grants are distributed. But the most unique element is identity-weighted governance. This means votes are not only about token quantity. They are also influenced by identity reputation. So a user with strong identity staking may carry more influence than a whale with passive holdings. This is designed to reduce plutocracy and promote active participation. But it also raises risks, because identity weighting could become subjective, and governance models that mix capital and reputation are still untested at scale. Ethereum has faced its own governance battles with EIP updates. Somnia will face even more complex dynamics as identity and finance collide. Here is what tips the balance. Somnia has already funded early developer hackathons, with more than 200 contributors across GitHub repositories experimenting with its SDK. A growing pipeline of indie game studios are piloting assets on Somnia testnet. and at least one mid-sized VC, Delphi Digital, has highlighted identity-weighted governance as a theme worth tracking in 2025. This early traction does not prove success, but it shows that Somnia's community is not just theoretical. It is already forming. Let us step back and consider the bigger picture. In 2025, the crypto market is not looking for the loudest hype. It is looking for infrastructure that can support real-world adoption. Ethereum remains the foundation. Bitcoin remains the reserve. But beyond them, the question is, which new layer one can create lasting value? Somnia is positioning itself as one of those answers. Its mainnet launch is not just another entry on the calendar. It is a test of whether the next generation of blockchains can merge finance, gaming, and identity into a single framework. And if it succeeds, SOMI could become one of the most asymmetric bets of this cycle. The risks are real. The execution is unproven. The narratives may shift. But the opportunity is undeniable. Because the truth is this: infrastructure always outlasts speculation. And the projects that quietly build the rails of digital economies are the ones that institutions ultimately adopt. So, if you are an investor, watch Somnia closely. It may be early. It may be risky. But it may also be one of the few projects that define the 2025 cycle. Stay sharp. Stay strategic. And keep wayfaring.